So when it's transaction related, depending on the industry, things are a little bit different, but there's generally going to be a certain amount of information you always want to see. And we always get started with what's always available, which is bank statements and financial records. And then we'll go from there. There might be 40 different other types of data points that we want to see, but we know some of those don't exist. So we'll just keep working through everything, knowing we may not get out all the requests fulfilled because they just don't exist. Ideally, we go visit the companies because we've learned this from doing the fraud work. We've learned it from doing other work. People will tell you stuff in person that they won't tell you over the phone. But if you're sitting in a conference room and just talking to them, they might tell you, hey, we've got this folder over here that has all these letters from the IRS. Do you want to see those? Yeah, we do. That'd be very nice to see. So we really do like to go on site. It might only take a day. It's not a long thing because we don't want to interrupt the entire business operation. But you can get a lot more done when you sit down next to somebody and you find out a lot more things that you just otherwise wouldn't find out. And then 3 or 4 weeks, get all of our work done and wrapped up and handed off so that the investors can make the right decisions. Have very open lines of communication with our client because one of the important things, especially for investors, is we don't want to spend a bunch of money on professional fees, accountants, lawyers, etc., to buy this company if there's no point because the company just isn't a very good investment. So we go fairly early on in that process as we start working through all of our information. If we realize early on that, hey, they told you they were making a certain amount of money every year, but that's really not happening. They're making half of that. That's going to change the calculus for the investors. And rather than wait until they've spent a couple $100,000 on attorneys writing contracts, we tell them that early on, and they can save all that money and just worry about a different investment, something else they've already started looking at. As we're going through everything internally, working through all of our analyses of all the different parts of the business, reviewing everything, making sure that it all checks out, something starts to look off, hey, pick up the phone and call because these guys need to know. And maybe they already know that. Maybe they knew that was probably going to be the case and they've already figured out a way that they want to deal with it. Well, that's great. That's their decision. But let them make that decision rather than us wait until it's too late and tell them at the last minute. So, and then if we do get through everything and the whole process wraps up, we've got our report we send on, sit down with the client if they need to, and ask the questions about not just the numbers, but all the people at the company that we interacted with and what kind of operation exists from our point of view, having seen hundreds of different businesses. Does this look like it's a pretty well-oiled operation, or is this really just a mess and we've got to fix everything day one, which plenty of them are okay doing. That's part of it and that's how they're going to operate. So